Hello to everyone, my name is Gregor Horvat and welcome to our new update Surfing the Elliott Waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the 10-year US notes, at German bonds, Euro, Dollar, Aussie, S&P 500, quick look at German DAX and also silver. So what's going on? As you know, inflation finally came to the downside more than expected, as reported yesterday in the US. So it looks like that speculators will put their bets that Fed will slow down their hawkish view, meaning that on the next meeting maybe they will go only for 50% rise, or maybe even they will stop rising maybe at the start of 2023. So this is obviously something that is driving the US dollar. We have seen a very strong drop on the US yield. The US dollar obviously is coming down as well. And if you can see this chart here on the 10-year US notes, well, the price is now trading even higher after this broken trend line, but still below that June lows. So technically trend is still to the downside, but based on Elliott wave terms and based on these fundamentals, I think that these reversals could continue at least towards, or at least into the next week. Today is Friday, very important day of the week. So if today the markets can close where they currently are, or maybe even more in the risk on, while the US dollar could see even more weakness, then this will likely suggest that we will continue in this direction in the next week, at least at the start of the week. So I think that this US dollar weakness bears have legs for more weakness here. But before we go to some of the charts of the Euro or Aussie, let me take a look also on the German Bund. We can see here that market has reached a very interesting 61.8%. So maybe there is a chance or time for some recovery here for a reversal. In fact, if you look here at the 4-hour chart, actually that's an hourly, sorry, that was a very nice recovery from the lows, followed by a 3-wave setback, and now we are again making a new breakout. So I think that there can be more gains coming in sessions weeks ahead, but the main driver for the euro dollar would obviously be the rates differential between the US and the Europe. So it's very important to look at this differential to see where the euro dollar could go. Now, if this, I have this one, the 10-year, the German bonds minus the 10-year US yields, you can see if this ratio will actually move to the upside, then it means that German yields will rise faster or will fall slower compared to the US yields. And I think that actually why this can be the case is because if the US yields will come to the downside, obviously this will have an impact on the German on yields as well, but because in Eurozone we also want to have a lower inflation, which is not the case yet. I believe that the ECB will now have to be much more aggressive with hawkish view, trying to catch the Fed, what Fed has achieved, and this could potentially mean that this ratio could move to the upside, and on the other hand, this could be positive for the euro dollar. So if the Fed will slow down the hawkish look, and then you have the ECB, which is still trying to catch these higher rates, then obviously euro dollar could see much higher prices. And if you look at the euro dollar price action here, we are coming quite nicely to the upside here. Unfortunately, we are still in very important resistance zone, so we'll have to see what will happen here. But what is very interesting, that this rise here from Friday of last week is actually, that was a swing low from 97.30, is still not in 5 waves. So even if the whole move, okay, that's the important part, even if the whole move from September lows will be in 3 waves, meaning a correction within higher degree downtrend, well, you still need that third leg, which can be wave C in our case, still has to be made by 5 subwaves. So I think that, as I said earlier, today is Friday. If market will stay where it is, or possibly even higher here, let's say breaking above 103, then I think that more upside could come next week, and that's when I would try to focus on pullbacks to catch this wave 4, and then look for higher for wave 5 within wave C, or maybe even wave 3. So in my eyes, I see euro dollar currently making a very important break here above 100.95. We are also above 100 two levels. So as long as we are holding above that support, I think that euro dollar, at least in the short term, can stay in the bullish sequence. On the other hand, if I'm wrong and let's say that the market comes back to the downside below or towards parity, then I think that more weakness unfortunately is coming for the euro. Now let's take a look on the AUDUSD. Now AUDUSD is clearly coming into some very important level here. Notice that I've been tracking this potential 7 swing correction to the upside. We are not making that overlap just yet, but it would be nice to see this overlap, because then we would have new evidence that market could be finally bottoming or turning to the upside. Okay, so again, watch out how the markets will close today. If we can break this 670 area, okay, and then potentially even extend higher, then I think that more upside could come, and then I would be looking for potential longs on this pair. On the other hand, a break towards lower prices will definitely put this pair into interesting bearish setup. So I have two wave counts here on the intraday, just to give you the full perspective of what I'm looking at. Actually, I have two wave counts. One is bullish and one is bearish, okay, on the intraday charts. And why I have both of them is because I don't want to be too biased when looking for potential trade opportunities. I want to be ready. So here I'm looking for a wave 4 recovery, ABC for W, then you have X and another ABC rally. So this is just an analysis. To make sure that this analysis is correct, I want to see the confirmation from the market. But what is the confirmation? Well, if this is the counter trend movement and you want the bearish resumption, what you need to see is an impulsive sell-off. Okay, so you have to see something like this. And if this market could make a 5-wave drop, let's say even back towards this 63.90 bearish level, then I would have confirmation from the markets that this resistance has held and that we are turning back to the downside. Then I would be looking for to short the rallies. If on the other hand, we will continue and resuming even higher and break that invalidation level, as I showed you earlier on the 4-hour chart, and then potentially I would want to see an extension to the upside. Then I will focus on these levels around 6800 to make sure that we are in a wave 3. Why 6800? Because here's the 161.8% extension of wave 1 measured from end of a wave 2. So if we can achieve that target, then we would have a lot of information to say that yes, we are in a new impulsive bullish sequence, and in such case this impulsive bullish sequence should be made by 5 waves, right? So then I think the opportunities could occur after this after this wave 4 pullback. Okay, so we are now currently at some kind of critical level here, critical price levels on the AUDUSD, where I want to see a response from the market. If it will break to the upside, then watch out for these wave 3 targets and then buy dips after wave 4 pullback. If we go down from here, let's say by the end of the day, this market completely reverse the situation and we drop, as I said earlier, back towards 6.386.4 levels at the start of next week, then I would be looking for potential short. So that's how I look at the markets, trying to be not biased, but just be aware and be prepared that anything can happen here. Okay, so before pulling the trigger, it's very important to keep in mind that market could actually, after all, moves in both directions. Now let's take a look also on the S&P 500. Now the S&P 500 is coming to the upside. Currently looking at the big daily chart, I'm still observing this ABC correction that can be finished, but again, for a confirmation that we are turning bullish, you want to see this channel resistance broken. That's still not the case. However, whenever we were trading at the lower side of this channel, you want to see, and there is no breakout, you want to see that price will actually move from one side to another. So in our case, we could be headed to the upper side of this channel. So if that's the case, then I think that there is still a little bit of more room for recovery. And looking at here on the 4-hour chart, this also makes sense because rise from 3700 is not in 5 waves yet. Okay, so if we can stay above 3860, I think that there is a chance for more upside until this 5-wave rise is visible on this intraday chart. So for now, I think that at least in the short term, stocks could see more upside. And again, Friday, very important. Watch out where the stocks will close. If we'll stay in green, I think that early next week we could produce more gains. If we see a drop below 38.60, unfortunately, then this higher degree bearish trend could actually resume to another low here. Now let's take a look on German DAX. Now it's interesting, the German DAX is much stronger if we consider the situation with the Ukraine, between Ukraine and Russia, energy crisis, natural gas and so on. Those markets can very aggressively to the downside. So maybe that's not such a big energy crisis after all. But still, looking at this price chart is a very interesting and sharp reversal. Actually, that's an important breakout above that trend line. It looks like we are going higher impulsively. We also took out these highs here from August, so it's very important to look for the next swing zone, which could be actually here around 14,700, even potentially 14,900 towards 15,000 level. But before we may get towards these levels, of course, there will be some pullbacks. And looking here at the 4-hour chart, this could be very nice wave 1. You had a wave 2 pullback and now an extended wave 3. Notice how the market actually broke that upper trend line here, okay, of this base channel. And usually this breakout, when it occurs, it confirms the situation that you are going to see sharp moves with an extension for a wave 3. And normally these trend lines on the pullbacks will hold as a support. So I like the idea that we are even extending much stronger while we are trading here above that trend line. So this makes me feel very confident that we could be actually in higher degree impulsive rise. So watch out for more upside, but just be aware that there can be a next pullbacks here, maybe early next week before we see more gains. So if you want to be on the long side, of course, watch and wait on these ABC setbacks before looking for any kind of entries here. Okay, now a very quick look on silver. Now silver, obviously metals in general, also came to the upside after these US yields came down. Now looking at this chart here, we are clearly at a very important swing zone here. If you look at this zone here, okay, it's a very important one, should not be ignored. Okay, but we could be chopping around here. I'm not really sure if this is wave B or we already bottomed. So I want to see the response. Either we break to the upside or we came lower. If we come lower and let's say we break this bearish level here at 20, we come back below 20, then I think that unfortunately we will have more weakness. But if we're just chopping around here, now let's say for the next few trading days, with the personality of a corrective price action, then I think that another jump could be here in the cards towards $22.50, maybe even $23. So the very important level for these intraday bulls to stay in play is 20.09. As long as this is the case, the intraday trend is up. This broken level would put bears back in play. Okay, Traders, thank you very much for your attention. I hope that you enjoyed this video, and if you're watching this video on YouTube, please leave us a commentaries or any questions below this video. Have a good day. Bye.